Hello friends, welcome back. Let's take a look at Ethereum. Now, I've just finished the Bitcoin video and it went on a little bit longer than I wanted it to. That's cool, it's fine, we talk about a lot of stuff. I do technical analysis in it right up to the very end, you know, like the very end. So if you want to tune into that one, then cool, relax, enjoy it. But if you want to find out about the sort of the giveaway thing that I want to do, or the bonus, whatever, the Bybit bonus that I'm going to be doing on the channel, which is unique for Rocky Outcrop petitions, then go ahead and tune into that video and skip towards the last sort of 5 minutes where I talk about it. Okay, so here we are back on the Ethereum charts, and what do we have? I've got it on log at the minute. I'm going to take it off log because this this wedge on the log thing that you have forming here at the end of what we're looking at overall in terms of the shape of the price action. Just let me get this on here. This kind of wedgy type rising wedge thing that we've got on here is worth being aware of. Right, okay, but just go back to linear scale, and acknowledge that we're kind of within a channel. And either way that you look at these things, if that's a rising wedge and you get a breakout, it could go towards the downside, as we speak about all the time on the channel. Can I just read it, whatever? As we speak about this all the time on the channel, you know, like sort of significant fake outs from patterns like wedges will often just fill out towards the outside of a channel, and it depends on your perspective, which is why it's quite good to sort of choose intermediary breakout targets rather than look at full measured moves quite often as a statistical thing to do to keep you consistently profitable over the longer term. So so if this was something like this sort of little wedgy thing, and you got a bit of a breakout down the way and the prices came down as far as the 165, what would it be looking like in terms of this channel and whatnot? Well, you just be coming down towards the lower end of it, you know, and you could say, hey, where did you see that? How did you even see that wedge was on there? Where did that come from? Well, you know, subjectiveness is a big part of trading, and you know, like just little things like what way you have your chart set up is a big part of trading. Ultimately, we're all looking at the same information. What are we looking at on the 24-hour then? Well, we've had a decent run at it. That's been good. If you've been watching along with the channel, then you've been happy enough to have been trading this area. We've kind of called all what's been going on here, not wanting to blow smoke up my own arse here or toot my own horn or whatever. Just wanted to say that we were kind of aware of how there was this channel here. We're kind of aware of how profit taking targets would have been in those 90s areas instead of pushing it all the way to the 200, because that's a little bit greedy when you were looking at these areas. There's definite profit taking targets coming in before then to be aware of instead of pushing it greedy style to 200. But then again, if it had gone to 200, would that have, in retrospect, of being greedy? Well, possibly not. And in fact, actually, maybe you should have been looking towards the higher 200, like 205 or 210 or something like that, as your profit taking target rather than 200 itself. And that's often a dynamic that we find in and around these areas, especially when it comes to round numbers, but really around any profit taking area, which is why it's best to err on the side of not being greedy. So anyway, 24-hour chart, what have we seen happen? Well, we've not actually got a higher high in here. That's cool. It's all happening in terms of us going up. So overall, if we look at this and say, like, if that had been a higher high locked in and closed at any given time, as we spoke about in the episode previously, I'm pretty sure we had, had the prices actually closed here up above 188 on the daily time frame, you would have had this divergence, bearish divergence, quite smacking you in the face, obvious, on the last two highs right across the board there. And that's not happened as a result of the price action not actually going up that high. One of those counterintuitive things where if you want to remain bullish, sometimes you want to see the prices actually come back down a little bit so you can remain bullish. Otherwise, and what you see often in the world, especially like crypto Twitter or any of this sort of, what I'm talking about, you've seen it. YouTube and all that, you've seen it, is that people get ultra bullish in and around these areas of, say, 190 and stuff like that, for instance, and talking about how things are going really going to plan, when the plan actually may well be that you don't want to sit in that higher high just yet because it'd be divergent and whatnot. What do we have below us and acting as support if we need it to? 177, we saw that working out yesterday, is an area for us, and 185 really is the sort of the current question mark line for us as well. If we can remain above this line and in the face of that potential divergence and what not playing out, that would all be good. Want to see the prices going up into those 190s and establish themselves in there over a longer period of time than just say an hour or whatever, or 4 or so. But 185 would be our first sort of little risk management area where you could very easily, I'm not financial advisor, none of this financial advice, easily sort of do things like take long or shorts down to this area of the 177, or perhaps look for a retest of the 200 simple. Now, why would you look for a retest of the 200 simple? Well, it's common, right? For one thing. Two, we've got the prices operating up above this above the 200 simple under the conditions of a sort of general death cross, so like there's that second sort of strategic look at things. We've also got the 236 coming in there and a potential Fibonacci retracement if we were to have that. Let's just draw this in wick to wick again. Where does this start at? Like the where's it starting at? I don't know. We'll start it from the bottom there up to the tops here. Going, well, that's not wick to wick. This would be wick to wick. Just a second, sorry. Well, you have 236 coming in there at 170, where they've got these two moving averages at, and if you were sort of paying attention, I suppose, as I was fiddling around with this thing, you go body to body on that, and it's the same sort of more or less same sort of dealio, where you're looking down towards these areas and saying, hey, that could happen, and if it did happen, then what would the results of that be? Well, if you were to actually come down to where this is currently positioned, at 166 area that we've spoken about, 168 quite a lot recently, you'd be doing potentially one of two things. One is that you're setting in a lower low, having set in a lower high, and you'd be doing that in the face of convergence on the oscillators down below, as we see this sort of end of trend taper off thing having been rejected from the bullish control zone, yada yada. Or you'd just be sort of like naturally filling out this channel, as we could have seen, because since we came up here, touched this, did whatever we needed to do there, and came down here towards the, and you come down towards the bottom end of the channel. Fair enough. Overall you've got that 236 in there, so that'd be like that as a thing to be paying attention to. And of course, if you were to do some sort of, like, we had this channel drawn in, this sort of wedgie idea, whatever it was on here. If you were to take a measured move off the back of, I know this is looking a bit mucky, off of all of this sort of stuff, and stick it up there, then you'd be looking down towards that 155 area where we've spoken about as being being a pivot point in the market and whatnot. Anyhow, several times, and that would be like what I would kind of go on to say would be fake out of the channel type territory. If we were to come down to here at 155, you could be saying this is a bit, anything up to here towards the 50 simple average, or we had the 382, for instance, where you could often see prices turn around at, would be kind of like a fake out of that potential channel, and the measured move off the back of that wedge, sort of 2 for 1 there playing out, which would be your sort of your bullish spin on what would overall be bearish price action with the lower low and having broken the 236 over there on that side of things. So and at which point, of course, I always kind of leave the responsibility with choosing what trades to actually make with all of you guys and gals, but and just kind of just present what would be the narratives and the stories and the technicals at that time. And of course, they're all tradable. It's all tradable events. You don't have to be a bear to make money, or you have to be a bull to make money at any given time. It really depends on your entries, exits, risk management, your strategy, your tolerance for risk, your stop losses, whatever, all that jazz. So just looking down then, I suppose, here at the 4-hour time frame, and did we get that high in on this one? Is to draw the contrast story out so we can wrap this up. And we did get a higher high there on the 4-hour, but we didn't get it on the daily. What did we also get hand in hand with that higher high in the 4-hour? We got some bearish divergence. I know that the price action is quite crushed. This is where the point is for the, this is where the point is here. So yep, definite bearish divergence on the RSI there. That's very much obvious, and on the DMI as well, and on the MACD, and on the stochastics. Does that turn out to be? Yes, indeed it did. So it's all there. So we could say then, looking at this, that we've had this higher high, and it's coming in. Get me back up. It's coming in at with bearish divergence on there. Could we see sort of any of those scenarios pan out? Overall, that we're talking about on the daily time frame, we can use this magnolia colored line here as a wee reminder of where that price action was that we're talking about. And yeah, you could, and it would all be coming in and ultimately setting in a higher low here on the 4-hour time frame if that was to be the case, and that could easily happen. And didn't mean to do that decision, sorry. Ruining it for all the fans, losing subscribers. Whereas over here on the daily time frame, that would be a lower low, right? Okay, so well, we'd have had so there's the dichotomy there at work currently. You obviously make your own mind up about how you think it's going to pan out, but that's the summary. 4-hour time frame. We're looking at bearish divergence and the potential to go in there and set in a higher low, which would be a lower low on the daily time frame, which actually had a lower high beforehand, but it didn't actually go up high enough to get bearish divergence happening here for a turnaround to go pushing past that point. Could this just be sort of taking the foot off the gas a wee bit in the meantime in order to be able to go up here without that divergence actually coming into play? You know, if we came up here and then actually pushed up and beyond, you could undo that across here. And that's it. Thanks so much for tuning in. Really appreciate it. Like, subscribe, all that stuff. Share this video with a friend if you've got one that would think you'd like it. Of course, what we do here in the channel is daily technical analysis. I'm Rocky Outcrop. If you've joined it through this part of the video for the very first time and you haven't subscribed yet, then go on, hit that button. You know you want it, and share this video with a friend, because a friend of yours is a friend of mine, and I feel like that's what we're all about here. FOMO-free, greed-free, clear-headed, no fog of war. Look at both sides of the market, where we could be going, the actual reasons for them, and then of course you can iteratively improve your own trading off the back of that, hopefully without me having to actually be your financial advisor. You know, best of both worlds. So yeah, thanks so much for tuning in.